Hi, my name is Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us today as part of our CSE podcast, special edition here in Vancouver as part of the Vancouver Resource Investment Conference in January of 2025. I had the pleasure of being joined today by none other than Rick Rule. Rick Rule began his career 50 years ago in 1974 in the securities business and has been involved in it ever since. He is known for his expertise in many resource sectors, including agricultural, alternative energy, forestry, oil and gas, mining, and water. In 1990, Rick founded the business known now as Sprott US Holdings, merging it into Sprott Inc. in 2011. He retired from Sprott Inc. in 2021 and resigned from the board of directors in 2023. He's celebrating his retirement by co-founding a new bank, Battle Bank. Rick is also actively engaged in private placement markets through originating and participating in hundreds of debt and equity transactions. I look forward to getting into things with Rick today. Please join us. Today I am joined by none other than Rick Rule. Rick, thank you so much for joining me.
Pleasure to be with you. Thank you for having me back.
We're having this conversation in January of 2025 as part of the Vancouver Resource Investment Conference. The last time you and I got to speak was during the pandemic. We were both holed up in our homes and you participated in our huge Mining Over Canada project that we did at the CSE. So I'm very excited to 4 years later, 4 years further into your retirement apparently, have a discussion with you about the markets. A lot has happened in 4 years, a lot of moving tides, and I'm very excited to have your input again on where you see things are at right now in the resource sector. So let's dive right into it. Rick, what are you liking right now, or what are your thoughts for 2025? What's your outlook?
Well, generally, I have to say I'm liking everything. I'm attracted to the fact that natural resource stocks haven't kept pace with the underlying commodity stocks. And I like the fact that the mood is very, very, very subdued. What that means is that there's more opportunity to separate the wheat from the chaff. You can see a drill hole and you can have time to study it rather than have a stock triple on one drill hole. We're in a very rational environment. We're in an attractively priced environment. We're in a stock picker's environment. I would suggest that we're in a really, really, really special place, which is nice. I expect the market, for those who are impatient, to improve. I sort of wish the market wouldn't improve. I wish it would keep at this pace for a very long time, but my wishes don't matter.
Now, when you say that, is that because you hope for a longer runway for you to find more opportunity?
Absolutely.
Gotcha.
I'm still looking to deploy capital.
Okay.
I'm in no particular hurry to cash in. So I'm actually benefited by lower stock prices rather than high stock prices. I realize that my perception is maybe different than some of your listeners.
That's right. Well, and I think that comes with all of the years that you've been doing this, and hopefully they learn from that, is to hold it for the long game. Do you want to talk about that a little bit?
What you say is very true. When I was a youngster and I had a lot of time left on Earth, perversely, I was very impatient. I had all the time in the world left. Now I'm running close to 72.
That's right. They're counteractive.
Pretty soon I'm going to shed my mortal coil, and all of a sudden I'm much more patient. It's really perverse. And it isn't like I wouldn't prefer immediate gratification, but I've just learned 50 years of investing that immediate gratification is not on offer.
Right.
So the idea that you would hope for something that you can't have,
yes,
probably not very relevant.
Okay, so let's break that down a little bit. If we're looking at a more speculative play, an early stage exploration program, your suggestion is take the time to own the stock. Pick the stock that you want and hold it for a while. And what does that look like to you? What is the trajectory?
If you look at the stock will tell you, if you listen, how long you have to own it. Okay. Let's say you buy one of your junior listings. And let's say you buy it because there's a nice surface anomaly, they've done good trench samples, now they're going to test it for the third dimension. And let's say that they convince you that it's going to take 10 drill holes to test the thesis. Let's assume that 10 drill holes should take one drilling campaign, but let's suggest for a second that it's in northern Canada. So it's actually going to take two drill seasons.
That's right.
What that means is that to test your thesis is going to take 18 months. If in your own mind you aren't prepared to own the stock for 18 months, you're setting yourself up for failure. You've invested in an 18-month narrative.
That's right.
And then you have trauma holding stock over a long weekend.
Yep.
A 3-month technique with the 18-month strategy is lousy math.
It also
the stock tells you how long you have to own it if you listen.
That's right. And it also might tell you how long the company needs to be a public company for. So 18 months, that's 2 audits. That's 2 AGMs. There's 2 things that happen within the public side of the company that need to occur that have its own costs as well. So you also want to make sure that it has enough capital to get through those.
Very good point. That's a very different point. When you are looking for an answer, you need to make sure that the company has enough capital to get you an answer. What will it cost you for the drill campaign? How much G&A are you going to consume? Let's say that the number is $3 million between the two. Oh, well, I see you have $1 million in the till. How do we get from here to there?
That's right. You're going to be calling me in 6 months, aren't you?
Now that could be a very quick hold.
Right.
Like that could be a walk out of the office and sell the stock hold.
Okay, so when taking a look at these exploration programs, is there a commodity that you're liking right now? No.
I like all the commodities. I've made really good money in commodities that were out of favor where I participated in a discovery.
Okay.
Those are different circumstances. Yes, I like certain commodities, but in the context of exploration, which is where I cut my teeth,
right,
I just want to be part of the big discovery.
Okay.
I have no interest in small deposits. It turns out small mines make small money, but they have big risks. Big mines make big money and have big risks. So I like the conjunction of big risk and big money, not
right.
big risk and small money.
Okay, so this is something that Rick brings up often. So make sure you rewind that and listen to it again, because it's very important, isn't it?
It's true.
As you're approaching, the speculative side of or your risk in an investment, that
Right.
is very important to remember.
For me, it's critical.
Yeah, absolutely. Okay, and just to jump back for 1 minute, you talked about the disconnect between commodity prices and what's happening within the market. Any ideas of why that's happening?
No?
No.
I mean, I really don't. Perhaps in the gold story.
Okay.
Perhaps. I'm making this up. I don't know it to
Sure.
be true. Perhaps the underperformance of the gold equities in the period 2000 to 2010 has made investors skeptical.
Okay.
I'll give you a bit of math. Between 2000 and 2010, the gold price went up 7-fold, and the free cash flow per share of the senior gold producers fell. It took real skill to turn a 7-fold increase in the selling price of your product into reduced free cash flow per share.
Right.
A different piece of math, your listings are going to hate me for this. If you merged every public junior in the world, every public resource company in the world, there's 3,000 of them between Canada, Great Britain, the United States, Australia.
That's right.
Merged every one. That company, let's call it Junior Explorco, that company would lose $2 billion a year.
Oh.
Maybe 4.
That hurts, Rick. That hurts.
So what price should you pay for this business? Should you pay 8 times losses, 12 times losses? That disguises the fact that 10% of the listings generate such incredible performance that they add legitimacy and sometimes luster to the sector. So the whole game is sorting through those 3,000 companies and finding 50 or 60 that meet your parameter.
Okay, do you have a few pieces of advice on how to find those 50 or 60?
People.
Okay.
Some people are serially successful. If you look at the success in Canadian equity markets, Canadian resource equity markets, I would suggest that at least 40% of the performance has been generated by 1% of the producers.
That's right.
80% of the performance has been generated by 5% of the producers. So your first chore is to find the 5%. Also identify the 95% and don't talk to them. But hang out with...
Bypass them at the VRIC floor.
Yeah. Hang out with serially successful people.
Okay.
I had the extraordinary good fortune as a very young man in 1974 to meet a guy who became a mentor named Adolph Lundin. Probably, had I not done business with anybody else in my career
That's right.
that wasn't named Lundin, I probably would have worked half as hard and made the same amount of money.
Right.
The lesson, by the way, is not to be that exclusive.
Right.
But for new people, find people who've been serially successful, and particularly people who've been successful at the task at hand. Bob Dickinson drilled a really nice drill hole in a porphyry in northern BC. I care about that because Bob Dickinson has been working BC porphyries for 50 years. Not only has he been successful, but he's been successful doing precisely what he's doing today.
A 10,000 hours type of commitment, right?
Or in his case, 40.
Or 40, that's right. You know what, I just had a conversation earlier with Brent Cook, and he talked about, being cautious about over-diversifying. Do you think that maybe we should be more diversified in the relationships that we build with various teams, or do you find a good team and you stick with them and follow them? Okay.
The latter.
All right.
Latter. What I hope I taught Brent, he used to work for me. He worked for me for 7 years.
He mentioned it.
What I hope I taught Brent is that retail investors, not people like Brent who spend their whole life at it, but retail investors should confine the number of stocks in their portfolio to the number of hours per month they want to work following their stocks. And I don't mean watching Rick Rule videos. I mean reading annual reports, reading quarterly reports, reading filing statements, reading insider statements, reading resource reports.
Yeah.
I've graded 100,000 portfolios in the last 10 years. I grade them for free.
Right.
And I've learned a ton grading portfolios.
Yeah.
And people will send portfolios to me with 60 names in the portfolio. I ask them by email, how many hours per month do you spend in your portfolio?
Yeah.
0.
That's right.
That person really should have 0 stocks. But a person who's willing to spend 10 hours per month should have 10 stocks. They need to focus. Brent Cook, because he has a wonderful Rolodex, and because in his retirement, he's working 40-hour weeks.
I know, you guys are terrible at retirement.
Yeah.
Great at resource investing, terrible at retirement.
But what I want to leave the people who are listening to the interview with is you need to own fewer stocks.
Okay.
And you need to know more about them. And you need to know why you own the stock and what would rationally make you sell them.
Okay.
And then when the reason to own a stock goes away, sell it. It doesn't matter if it's up, down, or sideways. If the reason to own a stock goes away, the stock has to go away.
Okay, I like that. Okay, I wanna switch gears a little bit because you have some opinions currently on the Canadian oil and gas sector, which is something we don't talk a lot about during VREC. Tell us what your thoughts are on that.
For investors, not speculators, I think that the Canadian oil and gas sector is probably the best sector in the globe for resource investment.
Interesting. Okay.
The Western Canadian Sedimentary Basin is a province I know well. I've worked in it for 50 years. Canada has much better human resources in oil and gas than Canada acknowledges. The headwinds for Canadian oil were your Prime Minister. He didn't see a business case for Canadian oil or gas, despite the fact that gas that sold at $2 per million BTU in Alberta sold for $14 per million BTU Canadian in Rotterdam or Shanghai. And your trading partners were crying for it.
Right.
The fact that he didn't see a business case goes to his numeracy.
Right.
It was there.
Right.
He has decided, as I understand it, I'm not Canadian, but as I understand it, he's decided to pursue other employment opportunities.
Well, it's rare that you get to resign and still work for 10 months. But anyway, that is the situation we find ourselves in.
I wish him well. But I suspect that the principal headwind that faced the Canadian oil and gas industry has gone away. The second thing that has happened, I think, and I'm no fan of our current president either, Trump, but I think the regulatory constraints around the transmission of Canadian oil and gas into U.S. markets and through the U.S. to Europe are going to get easier.
Okay.
And oil and gas generally is cheap. The equity wrappers relative to the price of commodities and the relative to the free cash flow of the producers is cheap.
Right.
And Canadian oil and gas is cheaper than the world averages. So I think you get a double bump.
Okay.
I think you do well as the oil stocks reprice, but I think the Canadian oil and gas stocks are going to reprice with an absolute vengeance. Okay. Everybody is afraid that Trump is going to apply tariffs on Canadian oil and gas, which is stupid. It's not going to happen.
Really? All right.
Americans are dumb, but we're not so dumb that we don't understand that tariffs are taxes. They're taxes.
Yeah.
And we have an integrated supply chain in North America.
Yeah.
Mr. Trump appealed to the U.S. oil and gas industry to support him in his presidency.
Right.
I suspect that they complied.
I believe they might have.
And as an example, the whole U.S. Gulf Coast refining industry has geared to producing petroleum products from cheap, heavy, sour crude. They used to get that from Venezuela. It turns out we're not so friendly with them anymore.
Right.
If we can get more Canadian product, a little bit, say 1.5 million barrels a day, that inures hugely to the benefit of the U.S. oil and gas industry, who are huge.
We're amazingly close too, which is fairly helpful.
We are. And I think this is going to sort itself out, and I think it's going to sort itself out sooner rather than later.
Yeah.
The Canadian oil stocks are depressed because people believe Trump.
Right.
I won't belabor that.
Okay.
But I suspect...
That's a whole other podcast series.
I suspect that the tariffs that people are afraid of are going to give way. And in addition to that, you are going to get fewer de facto objections to transmission of Canadian product out of Canada. Two wins.
All right. Okay. That's very helpful. Thank you for that. I want to finish off with one more commodity before we end off. You are here at VRIC. You will be getting on stage, or you have just gotten on stage and talking about the uranium sector. And I know that that is a top of mind for a lot of investors. It's very attractive for people. There's usually a commodity that you can hear the word buzzing around on the floor, which seems to be uranium right now. What are your thoughts?
The easy money's been made. Let's get that out of the way.
Okay.
The last time you and I talked, the price of uranium was $20 a pound.
Right.
It cost the industry $60 a pound to produce it.
Okay.
Either the price of uranium went up or the lights went out. It was really, really, really simple. Nobody wanted to own it. People see value in a narrative after the price increases made the narrative valueless. So when uranium stocks went from hated to tolerated, and the price went from where it had to go up to where it didn't have to go up, that was the easy money.
Okay.
What's in front of us is the sure money. Here's why. Uranium, unlike any other commodity market in the world, is evolving from a spot market where there's no price certainty over time to a term market where there's contractual certainty.
Right.
Uranium producers today can enter into purchase and sale contracts with investment-grade counterparties. Southern Company, Duke Power, Tokyo Electric Power, China General Nuclear.
Okay.
And they can tell today how much they'll be able to sell and the price that they can sell it for 20 years from now.
Wow.
This certainty of price makes it less risky to lend them money, which lowers their cost of capital. And old, lazy securities analysts like Rick Rule don't have to rely on their own price forecasts. You can look at the commodity.
Yeah.
You can look at the contracts.
Yeah.
This is true in no other commodity in the world.
Okay.
And
how recent is this?
It's evolving.
Okay.
It's evolving.
Okay. So the opportunity could be right now.
It's unbelievable.
Okay, great.
And not 1 in 1,000 uranium investors understands this. You are in a circumstance where companies that wouldn't otherwise be able to develop deposits, they'd have to sell them.
Right.
Because of the price certainty and the decreased cost of capital, will be able to do it. This is hugely important.
Amazing.
And nobody knows and nobody cares. There's probably 10 or 12 legitimate uranium juniors.
Right.
And people are pricing them the same way that they're pricing the no-hope penny dreadfuls.
Okay.
And this is a really, really, really relevant statistic.
So there's an opportunity there.
An enormous opportunity. Let's do this one more time, though. The easy money has been made.
Okay.
It's the sure money that's in front of us.
Okay, which means you have to hold it.
Mm-hmm.
Okay,
Absolutely.
I like that. Okay, I want to end off because I don't feel like we can end this conversation without me asking you more about some of your hobbies in your retirement. Battle Bank, tell me about this.
If you ever decide to retire, don't start a bank, first of all. This is my 7th. I've been in the banking business a very long time.
Okay.
It's a very good business if you're prudent, and it helps to be old to be prudent.
Okay.
We built a bank some years ago called EverBank, which was one of the first nationwide online banks in the United States.
Okay.
It was hugely successful. We took it from a zero start to 275,000 customers,
Wow.
$28 billion in deposits, sold it, took it public in the New York Stock Exchange, sold it, all good.
Yeah.
The people we sold it to, very good people, but their target market was retired teachers. That was not our target market. And so the people that we sold our bank to abandoned our customers.
Okay.
And our customers started coming to us and saying, we want you guys again.
Are you talking about the teacher's pension fund?
No, the teacher stayed there.
Okay.
The 275,000 customers that we delivered them got over time abandoned.
Okay.
And so they'd like a new home.
Okay.
So we've reassembled a team that built EverBank, and we're building something called Battle Bank.
Okay. I like the name.
By the way, we'd love to do business with Canadians.
Okay, good to hear.
If, as an example, there was another truckers' convoy and Ottawa decided to freeze the accounts of individual Canadians.
A stain.
If the Canadian government asked me to do that,
yeah.
I would greet that request with a raised middle finger, international high sign of unfriendliness.
Right? It was unbelievable how that was treated. But anyway.
Also, which will be of interest to your audience, apparently no other bank in the United States thinks that gold or silver is good collateral.
Really?
I beg to differ.
Okay.
So if people own substantial amounts of gold and silver and they own it in segregated accounts, we would love to open credit lines secured by gold and silver. If you want to access the capital you have tied up in gold and silver, but you don't want to sell your gold and silver and pay the capital gains tax, we will absolutely make capital available to you. Want to buy a duplex or a triplex with that money? Want to buy more gold and silver? Whatever you want to do. If you want to access the capital, the credit tied up in your gold and silver, Battle Bank's your place.
Wow. That's incredible, Rick. Thank you. You know, I do have to give you just a huge thank you for what you've done for the industry. You continue to show up after you said that you were going to slow things down, and I think that you draw people into a room that's really important to get more and more people and younger people in the room. And I know that you welcome people emailing you directly and sending you their portfolios and getting your advice. You've just been such a wonderful influence on our market. So just thank you so much for everything you've done.
Thank you. Let me talk about that a bit. If you go to my website, Rural Investment Media,
yes, list
your natural resource stocks, and I will personally rank them 1 to 10, 1 being best, 10 being worst. I charge you no money for this, so of course there's a money-back guarantee. In addition, at Rural Classroom, I have 200 hours of instructional programming representing 50 years experience in natural resource investing.
Amazing.
Similarly, it's free.
Right.
I tell you how to evaluate natural resource stocks. I talk to you about how the uranium business works, the silver business works. 200 hours of instructional programming, including every Thursday a personal Q&A with me.
Okay.
All free.
Amazing.
Once again, money back guarantee. You know?
Yeah, exactly. Exactly. Rick, you are just such an amazing man. Thank you so much for your time today, and I wish you the best of luck at the rest of the VREC conference. Can we please do this again?
Up to you. I'm here. I'm here. I like this.
Thank you again, Rick.
Great.
Thank you.
Thank you.